Good evening and welcome to the Grace Talk. I am Gloria Godson. Thank you for joining us. I trust God that all is well with you and your family. We are in very tough times. Coronavirus has wreaked havoc on human health and safety all around the world. Globally, over 500,000 people are infected and over 26,000 are dead. Wow. In the US, we have several hotspots with over 100,000 people infected and over 1,500 dead. Those are staggering numbers. Our prayers are with the families of those who are sick and those who have experienced the loss of a loved one. May God help you during this time of grief. As grim as that information is, that is not the only thing that we are seeing out there. We have seen America rise up to the challenge. Medical personnel and first responders are working around the clock. Truckers are getting supplies to stores. People are stocking the shelves overnight so that the elderly can shop. The cruise lines are providing fully staffed cruise ships. Car manufacturers are making ventilators. Men and women are making homemade masks. Schools are feeding kids. Churches are holding online services. I can go on and on. I just heard this morning that 65,000 doctors descended on New York, coming out of retirement to help. Folks, this is America. The Bible says that when sin and evil abounds, the grace of God much more abounds. That's what we are seeing. God is at work, and coronavirus cannot stop that. But you know what? The stock market is also severely impacted by the financial markets, by the coronavirus. And I have heard from many of you that you are concerned about the impact of this virus on your investments and your 401k and on the economy. So today, we have two investment experts from Ambassador Advisors, a Christian investment and wealth management firm, on this show to address this topic and to answer your questions. So please join me to welcome Adrian Young, Executive Vice President, and Jay Peroni, Senior Portfolio Manager of Ambassador Advisors. Adrian and Jay, welcome to our show.
Thanks so much, Gloria. It's great to be back. There was one opportunity to be here before, and it's been an opportunity, that we were looking to do again. Unfortunately, under these circumstances, but nonetheless, we're very happy to be back.
Absolutely. I love technology and the opportunity that is given to us to connect remotely today, to be able to bring your expertise to our audience. So Adrian, I know you've been here before, but it's been a while. So let's start with you. Please introduce yourself to our audience and tell us a little bit about what you do.
Certainly. So as you mentioned, as Executive Vice President for Ambassador, I'm in charge of a lot of our strategic initiatives. I oversee a lot of our financial planning, tax planning, and our investment management committee with the man next to me, socially distant almost next to me, Jay Peroni. And we're going to talk today a little bit about, what's going on in the economy and the markets, what is going to happen as we go forward to the best of our knowledge. As stewards and as investors, what should we be thinking about and what should we be doing and what shouldn't we be doing? And then lastly, what opportunities exist? As a Christian financial planning firm, we serve, clients up and down the East Coast and throughout the nation. We have multiple office locations, and we're here to serve, and we want to make sure that your viewers and listeners, are in the position to be the best stewards they can of those resources that God has entrusted them.
Thank you. And Jay, we're so glad to have you. My understanding is that your expertise is right what we need today, which is to tell us where the market was and where it is and what got us here.
Exactly. Yeah. It's been a really challenging time. If you look at 2019, we had a lot of momentum on our side as we headed into 2020. We had a banner year in 2019. The stock market was at all-time highs. We had a lot of economic momentum on our side. We had unemployment at 50-year lows. We had consumer spending at 20-year highs. We had consumer sentiment and investor sentiment very, very high. So it looked like 2020 had a good year. Our firm was expecting a little bit of a pullback in the first quarter of 2020. That's normal after a long, strong market. Normally there's some sort of pullback. We were expecting that pullback, not knowing what it was going to become. And unfortunately, this coronavirus or COVID-19 kind of came out of nowhere. It started in China late 2019. There wasn't a lot of news about it. And all of a sudden, it started to creep into the headlines. And at first, a lot of the companies were concerned about, okay, who has exposure in China? There's manufacturing there. There's going to be supply issues. So it started as a supply chain issue where companies were concerned about if they had exposure to China. Then as we learned more about the disease and this virus and how it was spreading, and all of a sudden you saw manufacturing plants shutting down. You saw these shutdowns where their citizens were forced to stay in their homes. And then it became, okay, well, if that's happening in China, what happens when that gets to New York City? What happens when that gets to cities here in the United States? And that's where it began to feel real. People started thinking, okay, if these companies shut down, what is going to be the economic impact? What's going to be the casualties? These things became more of an issue, and that's where fear started creeping into the markets. The markets hate uncertainty, and we had a huge bout of uncertainty with this coronavirus coming into the United States. And where we're at right now is we're still trying to gauge exactly what the economic damage is going to be. We know there's going to be damage, of course, when you shut down businesses and companies and people aren't spending. There's going to be some sort of fallout, and that's really where we are today. We're trying to get a handle really on where we are as a country, as the world kind of takes note of where we are with this economic situation.
Thank you, Jay. Thank you for reminding us that actually you were expecting some sort of market correction to happen. It's just that it's not to the magnitude that we are seeing right now.
Yeah, we were expecting maybe a 5-10% correction, not a full-on bear market where the market drops over 20%. We weren't expecting that. But obviously, as we learned, the number of businesses shutting down and these stay-at-home orders where the government's actually saying, don't go out and spend money. We haven't seen that really since wartime. You'd have to go back to some of the previous wars to see this type of forced stopping of economic activity.
Absolutely. And that's really where we are. We are at war, but with an invisible enemy. This is a global conflict with an invisible enemy. Now tell us, what are the possible outcomes for the economy at this point?
Yeah, we really are expecting typically either a W or a W-shaped recovery. And let me give you a couple of reference points so your viewers can understand the difference between the two. If we look back to as recently as 2018, we had a V-shaped recovery where the market essentially bottomed on Christmas Eve. It was December 24th. The markets had a huge sell-off, and then right after Christmas, the market just started rallying and really never looked back. There was really no additional pullbacks, maybe small ones here and there, 5 to 7%, but there was really no big pullback. So you had essentially a V-shaped recovery where the market just fully recovered after reaching a bottom. That's what a V-shaped recovery looks like. If we want to look at a W-shaped recovery, we can go back to the financial crisis back in 2008 and 2009, and where you saw a recovery, the first V, but then you saw another leg down to retest the previous bottom, and it went actually a little bit lower before it finally found a bottom, and then it shot back up. So you see a W pattern at the bottom of this particular type of market. And if you look at today, we could see a V-shaped recovery. It's still possible. We're heading upwards here from the bottom that we saw this past week here. But until we get higher up along this kind of recovery, our concern is that we may have some more bad news that comes out, and the worst may not yet be behind us. We may retest those previous lows. So we're expecting this bottom-in process to take a little bit longer than we saw in 2018, but maybe not quite as long as we saw back in 2008 and 9.
Thank you, Jay. But again, we are hopefully going to see something that will be helpful there, and that's the stimulus package that has just been approved by the government. So can you talk a little bit about that? How would that support this transition?
Yeah, this is a record-breaking stimulus package, over $2 trillion of aid that's coming out as a way to support, number one, the businesses that have stopped. They're going to need some loans and some resources to be able to continue to survive, to pay employees. The government has also extended unemployment benefits through this particular package, allowing for those that are out of work to have some aid. There will also be rebate checks where there are going to be some money that's coming out to individuals under certain income levels for each person in the family as well as children. So there's going to be some actual money that comes out via checks or direct deposits. Additionally, the government is supporting these hospitals that are just overworked and understaffed and providing some additional resources so that they can continue to supply that well-needed help. We're so thankful for all these people that are working hard in the medical industry, just working day and night, long shifts, and just they need the support as well. So we've got these record numbers of stimulus that's coming out that's going to provide some stability and liquidity to the markets, the financial markets, as well as provide some stability to businesses and consumers and the medical field.
Thank you, Jay. If you're joining us right now, I have in this, well, I usually say I have in the studio with me, but I have on this show because we're doing this social distancing. We're listening to the instructions coming out of the CDC. So I do have on this show Adrian Young, who is the Executive Vice President of Ambassador Advisors, and Jay Peroni, who are talking to us about the financial markets. You have indicated that you are concerned about your investments, the economy, and your 401k. So here they are, they have expertise in this area, and they are here to talk to you. So if you're just joining us right now, stay tuned because we are going to dive right into that. Thank you, Jay, for your comments. That was very helpful to hear how we got here and the evolution really of this problem up until now. Now, our listeners have expressed concern about their 401k and investments. And like you have indicated, the market has seen a downturn. My question is, should they do something? Because when you look at this market, there's a temptation to have a knee-jerk reaction and to pull back and go to cash. Is that the right thing to do at this time?
I don't think it is, because if you look at history and you look at how things typically proceed, if you were to miss some of the best days in the market, and I believe that the best days are still ahead of us, and that you can't let fear dictate your financial decisions, because faith is the opposite of fear. And right now there's a lot of fear in the markets. And history has shown us that if you look back over the best and the worst times throughout history, if you were to just stay the course rather than selling, you're going to be far better off. For example, Putnam Investments did a study going back over the last 15 years, and there have been some really trying times over the last 15 years, financial crisis and what we're seeing today, as well as what happened in 2018. And what they were to see is if you were to miss just the 10 best days in the market, so you don't know when those 10 best days are going to be, but your returns would be less than half of what they would be had you just stayed the course. So if you started with, say, $10,000 back 15 years ago and you just let it ride, you just didn't make any moves, you kept your money invested, you would have earned about 9% per year, and your money would have grown from about 10,000 to 36,000. However, if you missed those 10 best days, your returns would have been about 4% per year, which is significantly lower. And then if you miss 20 or 30 or 40 days, the numbers just are so pale in comparison. So you want to make sure that when you're looking at investing, you don't try to time the market, because none of us know when the bottom's going to be. It could have been last week. It could be a week from now. It's time in the market that is going to give you your returns. Putnam also showed, what has happened throughout the last 15 years, and just showing how your investments have performed over the last 15 years. If you just stayed the course, you can see the ups and downs, but over time, your money steadily grows by staying to your investment plan and not making rash decisions in response to events that are taking place.
I really like what this slide says. Time, not timing.
Exactly.
Best way to capitalize on the stock market gains. So Jay, this is very helpful to see, not just to hear you, but also to see this graphic that shows us why it's not a good thing for you to try to read the market and do something on a particular day, because it's just over a period of time. And there's no way anybody's going to know when that time, that perfect time is to pull out or to invest. So
exactly. Yeah, and throughout history too, we've seen that. If we go back to not even just the last 15 years, if we just go and look at some of the most recent bear markets and some of the corrections that we've seen, we can go back to 1987, right? The Black Monday that everybody talks about, the crash of 87. And if you had pulled your money out at the bottom, which was a decline of 33%, if you just said, okay, I'm going to put it in cash, you would have missed from the bottom a 21% increase that happened once that market reached the bottom. So you would have lost out on that opportunity. And then if we look at the Gulf War that happened in the early 1990s, the market again dropped about 20%. And if you pulled out at the bottom, you would have missed a 29% gain that took place after that market bottomed. And then if we look at the financial crisis that was created from there was kind of an Asian financial crisis in 1998, and that created a 19% decline. And if you looked at the 12 months once that market bottomed, there was a 37% gain from the bottom. And then we look at the tech bubble. Everybody remembers the internet stocks crashing and, a very turbulent time for tech stocks. And that saw the markets drop 49%. People said, this will never come back. It's all over. And 12 months after the bottom, the market was up 33%. Then if we look at the U.S. was downgraded back in 2011, another huge hit to the stock market, down 19%. At the bottom there, the market rallied 32%. So again, showing you the resilience that the market has. And then finally, again, back in 2018, the most recent example, the market almost dropped 20% from the bottom there. And then if you had gotten out at the bottom, you would have missed, over the next 12 months, the market rallied 37%. So it just shows us the market's been through world wars. It's been through terrorist attacks. It's been through particular markets, the tech market crashing. Americans are resilient. Our markets are resilient. They will come back. It's not a question of if, but rather when.
Thank you, Jay. That's comforting to me as an investor to see those figures and to hear you demonstrate that the resilience in the market and the reason why it's not in anyone's best interest to pull out of the market right now. And I'm taking your advice, right, Jay. But the question is, you've told us not to pull out, but what should we be doing at this time? If we're not going to have a knee-jerk reaction, if we're not going to go to cash, what is it that we should be doing at this time?
Yeah, there's a lot of opportunities. Whenever there's challenges, there's also opportunities. And if we look at some of the best stocks that we've seen in 2020, there are areas of the economy right now that are still doing very well. If we look at as well, there's certain areas of the markets that have been doing very well as far as the stocks that have done well this year here in 2020. We've seen some really good names that have done well, companies like Clorox, we've got Hormel Foods, we've got Kroger, we've got various stocks in the economy like food and staples and things like that, utility companies that have done fairly well here in 2020. So there still are a lot of great opportunities despite the markets going down.
And Jay, you had talked to me just the other day about the idea that if we do experience this W recovery, that there's opportunity for buying along the way. And maybe you can talk a little bit about the concept of dollar cost averaging.
Yeah, absolutely. Yeah. So if we see that W type of recovery, normally there's going to be ebbs and flows. There's going to be various types of ups and downs. And one of the greatest things that you can do during this time, if you're feeling unsure about where to invest and how to invest, is to use dollar cost averaging. And what dollar cost averaging is it looks at taking a set amount of money and deciding how much you're going to do over a period of time, whether it be a month or 2 months or even weekly. You decide on how much you'll invest, what frequency, and how often you're going to do it, once a month, twice a month. And you decide what you're going to invest in, whether it's a mutual fund or an ETF or an individual stock. You invest in that same investment or multiple investments over a period of time so that when the market's going down, you're buying at lower and lower prices so that when it does recovery, you can recover much faster.
And this is one of the opportunities that we're seeing for a lot of our investors right now, is that if they have their traditional CD investors or they have money on the side, or even if they did, incur that knee-jerk reaction and move the cash, getting that money redeployed through dollar cost averaging allows them to buy along the curve and allows them to get a better opportunity than, as Jay mentioned before, the idea of just trying to time it and hope you did well.
Exactly.
Absolutely. If you're just joining us now, we are having a discussion that for me personally is getting me a lot more comfortable with where we are and where my investments are. You have Jay Peroni of Ambassador Advisors, who is a portfolio manager, telling you that it's a bad idea at this time to pull out of the market, because he's demonstrated that the market again and again and again has recovered after a downturn like the one they were seeing now. And those who exit the market lose that upswing. They lose the benefit of when the market comes back. So America is resilient. Our markets are resilient. Our investors are resilient, and the market is going to bounce back. The question is for you, if you leave now, you are not going to be able to partake or to participate in that rebound. That is what he has been sharing with us. Now, Jay, back to you. Are there areas of the economy that investors should be watching for these opportunities, the dollar cost averaging opportunities that you and Adrian just talked about?
Yeah, so if you look at the markets right now, as I mentioned before, there are a lot of opportunities. And if you think about it, what this shutdown is forcing companies to do is be more creative and be more innovative. So I think a lot of the companies that are doing well right now are going to come out on the other side of this much stronger, because it's forced them to do business differently. And it's also forced the consumer to start looking at, okay, during the shutdown, what companies were I supporting? Where were I buying money and so forth? What companies do I think will move forward as well? And what we're seeing is a lot of great opportunities within the healthcare space, within technology. And then as people are getting their rebate checks, they're going to be supporting their utility companies. They're going to be making some purchases, food and essentials. So we like a lot of companies right now that have strong cash flow, they have strong balance sheets, and they're in sectors that are rising right now, which again, healthcare, technology, consumer staples, and some of the consumer discretionary companies like retail, and those particularly that have online retail, we think are going to be favorable moving into the future.
Absolutely. This is phenomenal to look at this. What I'm hearing from you is that anyone who is paying attention should see the companies that are doing well right now at that level of resilience, and maybe consider going into the future that those companies might continue to do well, and they may want to deploy their capital to those companies. Now, what about other things that listeners should be considering and doing at this time?
Yeah, the other thing that I would take a look at is one of the things as investors, and kind of what makes Ambassador unique, is we take a biblical, responsible approach to investing. What this means is we don't just invest in any company. We want to look at what they're doing, what they're supporting, and does it line up with our Christian values? So we use a number of different screening processes to look at not only what that company is supporting, but what they're doing with their money, where they're donating money. So we use a number of screening factors that look at avoiding certain types of companies that would be offensive to Christians, things like abortion and pornography. But we also want to invest in companies that are making a positive difference on our society. So we do positive screening as well. We want to find companies that our clients can be proud to own, knowing that these companies are changing the world around us. They're providing value and service, and treating their employees and customers with dignity, and really enhancing the lives of us each and every day. These companies also are involved in things that are changing the world. They're coming up with cures for disease. Some of them are working on COVID-19 vaccines and cures for those diseases. So we want to support those companies and put our money where our mouths are. And that's what biblically responsible is not only looking at the amount of profit that you're earning, but how you're earning it. As a good steward, we want to hear those words, well done, good and faithful steward. And that's really what faith-based or biblically responsible investing is all about.
And I think from a stewardship standpoint, one of the other components, and Jay's speaking to this, is that, we want to ensure that we're doing the best, we're putting our money where our mouth is. What's interesting with this is this has been a relatively new, although, we've been doing it and Jay's been doing it for well over a decade, is finding these companies that are doing well. And by finding the companies, we don't have to eliminate all the companies. There's a big misnomer with the notion that in order to, find something that's going to be according to your values, you got to take all the good companies off the table. But Jay, I don't know if you have a couple names, but we've done relatively well with finding companies that are able to not only do well, both in the up market as well as in the current time period, but also companies that names names you support, names you're using, like Jay said before, during this time period.
Yeah, and during this time period, if you look at the top 40 performing stocks here in 2020, which has been a challenging year, in our portfolios at Ambassador, we have 5 of the top 40 performing stocks. So it just shows what Adrian said, that you don't have to, sacrifice and get either good returns or invest according to your faith. You can have your cake and eat it too, because there are literally thousands of choices, even after we screen out the bad ones, and then we screen in ones that are positively impacting our society. We have thousands of choices. There's a lot of stocks in our portfolios that have done very well this year in the technology space, in the consumer staples space, that line up with biblical values.
And when we talk about opportunity, and that's what really excites me, there are just a multitude of ones that are out there. And one of the ones has particularly to do with the market and investments. When we've got a big downturn like this, it gives an opportunity for investors that are out there that really want to put their money where their mouth is to have a reset. A lot of people are oftentimes scared. They have paralysis because of capital gains or large positions that they don't want to have to pay tax on. And I'm going to talk about some tax opportunities too. But during a downturn like this, for those who are looking to say, listen, I want to ensure that I'm investing in ways that are going to be both honoring to God as well as to help the economy and society as a whole, moving to a biblically responsible type of mandate with your investment, now's a great time to do it because we have this reset opportunity. Another great opportunity, and I'll talk about just, we mentioned dollar cost averaging and some of the other things that are there, is how do we get money in positions where they can take advantage of tax deferral? What are some of the tax pieces? When we talk about stewardship and this idea of leaving a lasting legacy, we talk about 2 main phases. We talk about the phase of optimal stewardship during your lifetime. What are we doing to make sure we're taking advantage of the tax code, that we're doing the things we can, parable of the talents, we're not burying our talents, but rather we're doing what we can to make them grow and multiply. And then secondarily to that is distribution at death, and we're not going to talk so much about the last one, but when we talk about stewardship during our lifetime, one of the big things that people can do right now is they can fund tax-deferred vehicles in the forms of their traditional and Roth IRAs. As you probably heard, the Department of Treasury and the IRS extended the tax filing deadline and the tax payment deadline to July 15th. That means that everybody has till July 15th to put in not only 2020 IRA and Roth IRA contributions, but also 2019. That's one of the code provisions that we have, is the ability to fund for last year up to tax filing. So guess what? That means that we can put cash on the sidelines or even other investable money, move it into things that are going to be tax preferred. And remember, the Roth IRA grows tax free forever, and get those dollars working for you in a tax preferred manner. Okay, that's one opportunity. Another opportunity during a downturn is what we call capital loss harvesting. All right, and what a lot of people don't realize is that when you have losses in your portfolio, not IRAs or retirement portfolios, but normal investment portfolios, the first $3,000 of losses, if you sell them, can be used to offset on a dollar-for-dollar basis your income. So when people have a downturn in the market right now, if they're going to do the reset opportunity that I mentioned before, the first $3,000 of losses that they have in any of the portfolio holdings they have can be used to offset other income that they have from their job or whatever it might be. Any other of those losses get carried forward into the future. So you could use $3,000 a year for multiple years in order to offset gains and other income that you'd have on an ordinary basis. That's another great opportunity. Another opportunity that we see people taking advantage of, again, talking about taxes, are Roth IRA conversions. So one of the things that a lot of people run into is, well, I can only put a certain amount into my Roth IRA, $6,000, maybe $7,000 if you're over the age of 50, but I want to be able to do more. I want to have what we call tax diversification. I want to make sure that I've got multiple buckets to be pulling money from when I'm in retirement. And in order to do that, you really have to fund Roth IRAs or Roth 401ks hard, but not everybody has that opportunity. But most people have pre-tax IRAs, either from past employers or otherwise. And during a downturn in the market, you have the ability to convert pre-tax money into tax-free money through a Roth conversion. Well, guess what? If your account's worth less, okay, and you convert now, you're going to have less that you have to pay in taxes later on. And now that money will forever grow tax-free when the market recovers. So it's a great opportunity in 2020 to look at converting traditional IRA money to Roth IRA money. These are three personal opportunities that are out there. But one of the other things that came out with this CARE Act that was out there, the CARES Act, I should say, that was just announced, is they did some tax planning opportunities for those faithful stewards who are giving to ministry. When we boil it all down, we got four uses for our money. We can give it. We know about the first fruits concept. We can use it to owe, if we have debt or other thing that's out there. We can use it to grow, okay, which is the long-term component, and then we can use it to live. And as faithful stewards, we need to be thinking about it. Every decision we have, every financial decision we have is a stewardship decision. And the government is saying, listen, we know there are a lot of organizations and ministries that are going to be hurting during this downturn. What can we do to spur growth? And so a couple things that they did recently was they actually gave a $300 above the line deduction for anybody who's not itemizing. And remember, with the increase of the standard deductions that took place recently, a lot of people, now 90% of the population, is not itemizing their taxes. They're taking the standard deduction. But if you give the ministry, you're going to be able to take the first $300 and deduct it. They want to keep growth and they want to keep spurring on giving right now. The other thing they've done for those who do itemize is they've actually eliminated the adjusted gross income limitation that normally exists. Yeah. Normally, a person that gives can only give and itemize up to 50% for cash gifts in any 1 year. Now they're saying, listen, if you have that heart to give and you want to help out those people that are there, you want to help keep the church going, you want to help the Boys and Girls Club going and doing things that are out there, go out and do it. We're not going to limit what you can give in any 1 year and take tax credit for. So the government is doing what it can on both sides, both from stimulus as well as from exemptions and incentives to help people do more for those that are out there.
Thank you, Adrian. That is a wealth of information. And if you're joining us, we have gone through a lot of information that we've received from Jay and Adrian. First of all, Jay began to talk about the history There's been a lot of history of downturns in the market. This is not the first. And there's also been a history of market rebound again and again and again. And Jay's point was, do not have a knee-jerk reaction. Do not exit the market out of fear, because if you do, you're going to cheat yourself out of the rebound or the recovery in the market. So stay in the market. Your chances are that you will be much better off if you leave your money invested. And Adrian has just shared with us some very good tax strategies that we can use to mitigate our exposure to taxes, and to manage the and to take advantage of the opportunities that exist in the tax code and the new ones that have just been added by the government. Again, he talked about capital loss harvesting and being able to have that take that benefit at $3,000 per year, right? That you can deduct, and you can save that for future years. If you have more, you can use the Roth Conversion, where you can convert your pre-tax dollars to Roth IRAs, and then you can also contribute right now both your 2019 and your 2020 contributions right now, and that would actually help towards the dollar cost averaging that you talked about. If you can make those contributions now, that will get you in the market at a good time. And so that when the market recovers, you can be in the best position to take advantage of it. It has been a lot of information. I don't know if I misstated anything, but that was what I heard from you guys.
You're right on the money, right there.
Thank you. So in times like this, obviously, the voices that we listen to is very important. And if you're listening to us today, you're hearing voices that are credible. You're hearing the voices of Christians who are telling you, both from their personal convictions and the expertise that they bring to the market, the right approach to these things. And something that you've heard again and again and again is biblical responsibility and stewardship. And that's what matters a lot to me. And that's why I really like Ambassador Advisors. Now, Adrian and Jay, my question to you is, where do our listeners go for the right kind of information? I've brought you to this table because I believe that you are one of those sources that they should go to. So talk to us about that.
Yeah, and I appreciate you naming us as one of the sources, because it is true. Obviously we don't have a monopoly on all the good ideas. We don't have a monopoly on the ability to bring biblical stewardship concepts, but it's important for listeners. It's important for all of us as stewards to understand that we need to build a trusted team, from your accountants and CPAs to your attorneys to your financial planners. Anybody that you're counting on to give you wisdom needs to share your worldview. And if they don't, you need to be continuing to look to find someone who is going to be equally yoked and is going to be able to help you be the best steward you can of your assets. And for those who are out there, again, we're one of those sources. There's information, that we have on our website that you certainly can set up with everything that's happening right now. We've been doing a wealth of online knowledge, both through eBlasts on what's happening in the economy. Jay's been putting those on a very regular basis, what's happening with the new tax code, but also the ability to start a relationship and start a trusted advisory sounding board, even with one of our advisors and an ambassador through our website. And we're there, we're here. This is going to continue forward. We want to make sure that during these times when people have questions, they have a place that they can go for answers, but also beyond that, what can they do today? Again, as you mentioned, to set things up so they can be as best positioned when the market does recover, get that cash deployed, get it in a position so that when we go back and look at this 5, 10, 15 years from now, we say, some of the best financial decisions I made when we got money into the market during the downturn because of COVID-19.
Absolutely. And people are going to get checks. We're going to get real money soon, and we need to make those kinds of decisions. We are coming to the end of a very, very good show today. Thank you, Adrian and Jay, for a very informative show. But before we conclude, I would really like you guys to take a minute and outline for our audience your key takeaways. If they've listened to you today, what are the key takeaways that they should walk away with from today's show?
Yeah, I would say, first of all, that don't let fear. The media is selling fear right now. There's a lot of panic. There's a lot of bad information that's being presented. There's good news too. You mentioned it earlier in the show. The Americans are coming together. We're resilient. We are just as a group collectively rallying together, and that's showing the best of what America is all about. And these companies that we're investing in are going to be here, 3, 4, 5 years down the road. The entire economy is not going to shut down. It may for a period of time, and there may be some more bad news that comes out. But time and time has shown us that if you go to cash and you let fear dictate your financial decisions, this is where some of the worst decisions are made. So don't let fear force you to make bad decisions. And also, now is a great time for a reset to evaluate where you're investing. Does it line up with your faith and values? This is a great time to, just embrace biblically responsible investing to be the best steward that you can be, using the parable of the talents. We're called to multiply what he's given to us. So now is a great time to be really putting that faith into action.
Beyond that, I think some of the other opportunities there, the reset, the idea of understanding what the tax code allows you to do to get your dollars working, get the dollars into traditional IRAs, Roth IRAs, get cash deployed, because when we're in a W recovery, or if this ends up being a V recovery, we want to make sure that when we're near the bottom, we're getting those dollars working for us. Continue giving to ministry, okay? Can't stress it enough. We're called to give our first fruits. We have to continue. We said that fear opposes faith. We must continue as stewards to continue to give. We have to continue to give. The IRS and the Treasury to understand that we're going to continue to give. They're going to give us benefits to do it. Have faith. Continue to give. Continue to support those ministries that are out there. God's timing is always perfect. This will come around, and when it does, we will undoubtedly be rewarded.
Absolutely. This, again, if you're listening to us, this show should give you some confidence, because regardless of what is going on Wall Street, we have a God. We have a God who is sovereign over all. We have a God who sits on the circles of the earth. He is aware of the affairs of nations, and this has not taken him by surprise. So this is going to pass. And I know that many of you in our listening audience, you're concerned about using your money to support things like abortion and other things. And this is really an opportunity for you to reevaluate and to line up your investment with your Christian worldview. And that's one of the reasons that Ambassador Advisors, again, they do this biblical, I'm looking for the R, biblical responsibility investment. So again, you can use that and take advantage of that right now. Thank you, Adrian and Jay. That is a very, very helpful insight as we close out today's show. I would like to end this show today with a call to action. A call to action to our audience. Again, if you're listening to us, you have received just very good information. Now, what are you going to do with what you just learned? I will suggest to you that you need to do at least 3 things. One is, don't watch the stock market. I did it one day, and it was a very sad day, so I stopped. Do not stay glued to CNN. Do not stay glued to whoever your investments are with. Step away from that and trust God, because looking at it would not only give you dizziness, it might give you insomnia as well. And again, fear, anxiety, and worry is contraindicators. They are not the things that God wants us to do at this time. Right now, we need to trust God and lean into him. So number 1, don't watch the stock market every day. Number 2, don't sell in a panic. The worst thing that you can do to yourself is to sell at the bottom of this market. Don't do it. And number 3 is to get good counsel from the experts. The Bible says that in a multitude of counselors, there is safety. And Ambassador Advisors, I've had a relationship with them for quite a while. And I can tell you that they are a great place to get sound investment advice. And as you can see on the screen, you just saw right now the contact information for them. Again, thank you, Adrian and Jay, for sharing your expertise with us today. We have come to the end of today's show. And folks, I hope that this information has been helpful to you. If you have any other questions or comments, please let us know. I know that Adrian and Jay will be happy to come back and to respond to your questions as we get through this crisis together. So please stay safe, stay strong, and stay healthy. Like us on Facebook, subscribe to our YouTube channel, and remember to join us on Wednesday for Midweek Connect Bible study and prayer. We have been having that, and we will continue to have that throughout this crisis so that we can connect with you in the middle of the week and strengthen your faith and encourage you to pray and to join with us. Prayer is the critical part. Out of this fiasco that we're in, we have a good God, and he always answers when we pray. So thank you so much for listening to us today. Good night, and God bless you.